Hello, hello, hello. This is Carl A. Smith, aka Dr. Cash, coming to you for our weekly stock market analysis for the week of September the 15th. Are the bulls back? If so, they came in very strong at the beginning of the week, however, closed out the week with making all-time highs. So a possible pullback back into range after multiple weeks of pretty much sideways action based upon back and forth communication or lack thereof between the U.S. and China in regards to overall tariffs, with both U.S. and China backing off over the last few days or so, with some additional opportunities for conversations. So we'll see how this will play out over the next coming week as we look to begin our initial or traditional sell-off toward the latter part of a quarter as we close out September and go into October. So as always, we'll jump right in for our weekly overview of the SPY, but we do want to take an opportunity to say thank you for all the very positive feedback. And don't forget to follow us on our Facebook channel. We will post a link below. We're looking forward to quick engagement, and if you have any questions, that is our job, is to here to serve you. So with that, we'll jump right in with our S&P 500 weekly chart. As you can see, we have had some very strong action over the last week with a breakout of range over pretty much all of the last few weeks, with continued higher highs in regards to price. But we did see something that's very subtle but very impactful, most likely, is we did make an all-time high on the SPY. However, we did not close above those levels. So we do want to make sure that we are consistently seeing a push forward going into next week. However, we do anticipate that there will be a retest, most likely back down into the 300 range as a potential support to push us much, much higher over our longer term trend line that we do see roughly about the $305 amount. So a very bullish week, obviously. However, we did see toward the latter part of the week some retracement back into range as bulls look to take off some risk as they did breach our all-time high on the SPY. So we'll continue to watch this area, roughly about the 302, 303 area. Given that this upcoming week is the Federal Reserve meeting on Wednesday, we do see some potential reaction in the market, albeit upward or downward. But personally, I do believe the market has embedded in some type of short-term interest rate cut, roughly about 25 basis points. Now, if that does not happen, that will send a very aggressive signal to the market in regards to a potential sell-off. So we do want to kind of watch ourselves. And if we do see some type of sell-off and we do break below this past week's this past week's low, looks like about $296, we do anticipate a push back into range. So we'll watch that as the week unfolds. If the FOMC causes this type of reaction to push us back into range, to look for some potential buyers to step right back in and push us even higher to break outside of this outside trend line here longer term. So we'll see how things work out, and we'll continue to monitor it. We'll move on to the NASDAQ, which is seeing a little bit more bearishness toward the latter part of the week as Apple, as well as some of the other tech bellwethers, have continued to underperform in correlation to their counterparts on the S&P 500, specifically Apple, who was downgraded in regards to their price target from Goldman Sachs, did cause a little bit of a market sell-off toward the latter part of the week. So we'll see how that continues or doesn't continue. We do have a very nice consolidation pattern, almost a true doji, which showcases indecision from both the bulls and the bears this past week. And if we do see the bears stepping in, we do see a retest of the 188 mark as a potential double bottom for a nice reversal back into range. But we do want to see if we can breach through value area high, which is roughly $191, as an opportunity for resistance to continue to push us to break higher highs and ultimately break that $195 amount for a all-time high on the NASDAQ. But we believe that we will either have a bias towards sideways to down, given the lagging aspect of some of your larger tech bellwethers, specifically Apple, Facebook, Amazon, and Google, Netflix has continued to underperform very much given their overall releases over the last few weeks ago. So we'll take a look and we'll move on to our IWM. Okay. So the Russell had a huge pop in volume, roughly engaging almost 8 points this past week, almost 9 points, excuse me, as we continue to have a nice breakout across the board for all markets. However, we did notice what we call as a look above and fail at our value area high at roughly $159 and a pullback back into range to be able to see if this is considered an early bearish signal that the bears will look to step in as institutions look to take off a large amount of risk given the huge bull run that we've had over the last month, specifically in IWM just over the last week. Now we did see heavy volume, as you can see toward the latter part of the screen here, over the last trading week. Roughly almost 170 million shares traded this past week in correlation to the previous weeks of roughly about 75 million. So we did see a huge opportunity for the bulls to step in to break us out of this multi-week trading range that we've seen. And we do look at this as a opportunity to anticipate potentially where the bulls will look to delever. Given the range of this overall trading range, we typically want to see some type of doubling of that range. So that puts us, roughly about the $163 level. Now we do want to see if there is continued follow through. We do have a bullish signal for the bulls, but we do see a slight pullback back into range, which is a very aggressive opportunity for us to take a look at potential shorts, given the amount of times that this $159 level has been touched and the auction has been rejected. Even if we go back into 2018, we've seen that this has been touched multiple times and have seen pretty aggressive failures of the auction. And we do want to kind of map that as a potential for us. Now, if this does get breached, we will see definitely a breakout of roughly about $165 level to potentially retest this 162. And if we do break 162, we do see a potential for us to come to this next higher volume node, which is roughly about $170. So we'll watch the IWM over the next week or so, but we do see an opportunity for taking some short-term shorts, as we did see a look above and fail at that $160 level. So as with always, we'll try to keep this video short. Thank you for all of your information, all of your feedback, and if there are some equities that you would like for us to review on a daily basis, our job is to serve you and help you out as best as possible. With that, take care and have a great rest of your week. As with always, it's your money and it should be